we wait for those earnings to come in, we bring in our panel for the day. Aaron Gibbs, Gibbs Wealth Management's Chief Investment Officer, joins us alongside Paul Dietrich, Fairfax Global CEO. Paul, you first on the markets, and then we'll get into earnings as soon as they start to cross. But anything on trade, and we'll get some details from Blake Berman about what's going on or what's not going on with China. But any hint that maybe we're moving in the right direction, we go up, and then when there's maybe some tension, we come back down. I mean, you would think some of this would be priced in, but I guess not. What do you make of the action we saw today?
Well, this phase one of the trade talks is the easy stuff. You know, it's getting China to buy more agricultural products, which will help during the elections. But all the difficult stuff we've pushed off, and we've pushed it off until probably after the election. If the Chinese have to bend, they'll bend to Trump after the election. But if the Democrats should win, then they think that they'll have a little easier negotiating posture with the Democrats. You know,
Aaron, one of the things that's been interesting to watch in the markets, and we saw it today, and I don't know how long this continues for, is whether it's China or it's the Fed or whatever's driving us higher on the day, we're going up right now, even though bond yields are going up. And then for some time, I think we reached July levels in the bond market. For some time, anytime that would happen would be, it'd be an issue in the markets. But do we continue to go up both with the yields on the bonds and the stocks? For now, do you think, as we look at the S&P, pretty close to record territory?
Yeah, I think now that we're, well, certainly, for at least in the earlier day, we're much more positive about the tariffs. We could easily just see an expansion just on, pure valuation expansion of like 5%, even within the equity markets, even as the bond yields go up. So, we're not at an overpriced or a really, expensive market right here. We're very much at the average. So there's definitely room for it to go up if we see some positive news coming forward.
And do you like the news, Aaron, on earnings? I mean, from what we've seen, we'll wait for these big ones today, but it means 8 out of 10 beating the street, something like that, right?
And, honestly, when you look at it, it's pretty much in line with the past 4 quarters. Yeah. About 3/4 of the companies beat. We've got, a 3% improvement. So it's very much average. For me, what I really like is that the expectations for 2020 have been remarkably stable. We usually see more of a pull, like starting to see negative revisions during the third quarter report. So for me, that makes me feel more comfortable about the next 12 months.
All right, fighting to be the king of original content, Netflix is betting on animation to take on Disney and Apple in the streaming wars, but is it enough? Aaron and Paul are back. Apple's strategy is really interesting. I mean, they're going to go with all original content. That is so expensive, but it does differentiate them. I mean, that is the lure on most things. I mean, you go to Prime because of the original content. You're excited about a show you can only see there. It's the same thing, when Netflix has an original. What do you think about Apple's approach?
Well, I think it's a smart approach. Remember, you have Apple TV, which has an awful lot of content. The new programming, they've got some of the best directors, Oprah Winfrey, Steven Spielberg, I mean, just all of these people. And they're also investing in animation. They have a new product that's a spin-off of Sesame Street. It's called Helpsters, and it's designed to teach preschool children coding. Now, can you imagine 3- and 4-year-old coders? I mean, yes. I feel like a dinosaur.
Aaron, what do you think about this as the streaming wars are stacking up? I mean, who has the winning approach?
First, you got to look at each of these companies because some of them are direct competitors, and then obviously Apple really, Netflix doesn't sell phones and iPods, so you've got to look at where they fit within each. But certainly, I think Netflix, since they only are selling content, going into foreign markets and buying one of the most prestigious anime studios and content, and so getting those international subscribers. Because most of it is watched outside the U.S. and then potentially still the U.S.
Jump
is
in
possible.
On you, Aaron, for a moment. The Disney numbers are out. At first glance, to me, they look like they're pretty good. We have Jerry Willis standing by at the New York Stock Exchange. The stock is up, Jerry, by 1.7%. Earnings end, is earnings and revenue better than expected? They both look pretty good, right?
Yeah, we got a beat on both the top and the bottom line. EPS coming in at 7. That's adjusted EPS revenue, $19.1 billion. Expectations on revenue, $19.04. Expectations for EPS, 95 cents a share. So a beat on the top and the bottom line.
Jerry, thanks. Off a disappointing number last quarter, but pretty good here, Melissa, this time.
As far as the Disney revenue call and earnings call, I think you've really got to ask about Disney Plus. They've laid out this number, 60 to 90 million subscribers by 2024. Is that a realistic number, especially where Netflix is at? Are they expecting people to switch from Netflix? And now that you've got Apple Plus out there, how are they going to get to that number? How are they going to do this? Because I think parks, movies, all of that has really shown that they can deliver. Now they're moving into a new arena, and you've got to wonder, what's the game plan?
Paul, I care about, I mean, a lot of people in our audience don't have Disney stock, but what they get from this is what's going on in the larger economy, because Disney is a great bellwether for disposable income. If I have extra money, I'm spending it on my kids, I'm going to parks, I'm doing these different things. The fact that parks beat, what does that tell you?
Well, you know, I go back to, and I would disagree a little bit that people are going to go from one streaming service to another streaming service. I believe people are going to be buying more streaming services. I mean, it's the cost of a latte at Starbucks. And with 5G coming in next year, every analyst I know believes that this is the future of television watching. And this is a really disruptive technology. It's going to change a lot of industries. I mean, we're going into the golden age of movie production and television production, and that's going to benefit studios like Disney and NBC Universal. It's going to have a negative effect on the cable companies, and there's one industry that's probably going to be put out of business, and that's the movie theater industry. And nobody's going to, it's going to go like Sears and the malls in America, because nobody's going to pay $16, $19 a ticket when they, for $4.99 or $6.99, can get hundreds of shows for the whole month.
It is interesting, Aaron. I mean, what it means for real estate in general. I mean, if you look at all of the empty storefronts all around America, whether it's the mall, you know, or it's the storefronts here in Manhattan, and now we're talking about the movie theaters as fewer and fewer people go. You know, my kids don't need to see something the day it comes out. They like seeing it at home in the comfort of their home with popcorn and everything else. We'll still go sometimes to something big, but it becomes just so much less frequent. You know, what are the larger impacts here?
So I think, you know, Disney is a perfect example of what you're saying. So parks, movies, and streaming are their three main businesses. And even if the movies disappoint, if we see a decline in the movies, if we see a better indication on streaming, and they're making more money there, where you're, like you said, your kids get to watch it at home, that's where the new revenue is expected. So one, I gotta say, this beat's really good. You know, over 11%. That's a big beat. That's not their average beat. So third quarter looks good. Let's see how their subscriber service comes out in a few days.
Right, especially spending a lot of money on other things, you know, to get ready for Disney Plus and what have you, to beat by this much on the parks. You're right, it's good news. So, Aaron, Paul, Dion, thanks to all three of you. We'll move on from Disney for now.